I want to bring to your attention a potentially undervalued company, which is 25% owned by Berkshire Hathaway. That's Warren Buffett's company. And it's an EV, electric vehicle company, with a whole lot more besides. It's Chinese based and they have two incredible moats. This company is flying way under the radar and I don't actually know why people aren't talking about it more. The company is called BYD, stands for Build Your Dreams. It's a Chinese manufacturer of EVs, but they also do buses, electric buses, forklifts. They make lithium batteries, solar panels, energy storage models, and much more. It says on their website here, BYD is a high-tech company devoted to technological innovations for a better life. And they were founded back in 1995, so they're not a startup company. They're well established in the sustainable future and green energy and just electrification of transport. Now, I know what you're thinking. Not another EV company, please. But bear with me because there's something quite unique about this, and you'll see probably why Berkshire Hathaway invested so heavily into it. Before we go into the company, I want to just clear up some confusion about the ticker symbol. They're listed as BYDDF or BYDDY. The reason is because they're not listed on the NASDAQ, they're on the OTC market. That's the over-the-counter or off-exchange market. And the OTC trading is done directly between two parties without the supervision of an exchange. That's in contrast with exchange trading, which occurs via exchanges like the NASDAQ. The NASDAQ or stock exchange has the benefit of greater liquidity and more transparency. And this is one of the reasons why I think this stock is flying under the radar. They literally have no SEC reporting obligations. So as a result, the media completely misses this company, even the Chinese media. But BYD is the second largest EV provider in the world, second only to Tesla. So we definitely need to look closer at this company. But just to go back to this ticker symbol confusion, broadly speaking, one share of BYDDY is equivalent to 2 shares of BYDDF. You can choose which you want to buy, but the Y shares have more liquidity. They have more information generally about the stock. And on a side note, ARKQ ETF do have this company and they've gone for BYDDY, and that's probably why, because it's got much more liquidity. ARKQ have shares valued at $57 million. That's 1.66% of their fund. Now, China is by far the biggest market for EV vehicles, and I wanted to see how they compare to Tesla and some other companies. And it's actually really difficult. This is showing the January to April 2020, so we're going back last year now. And you can see they're listed second on this site. This is the Clean Technica website, and that is double NIO sales down here. But in the same period, the first half of 2020, this website, Statista, puts BYD at the top with sales exceeding Tesla. That's in China. BYD is currently $46.13 with a market cap of $72.53 billion. Let's compare that to NIO. Stock price is $40, market cap of $62.91 billion. And Tesla here, $691, market cap $663.85 billion. So what is this company? More like a Tesla or more like a NIO? Well, potentially more like a Tesla. BYD is completely vertically integrated, and most importantly, one of their moats is that they produce their own batteries. Now, Tesla's been very vocal on saying that there's going to be a battery shortage, especially lithium ion. But BYD have come up with a battery technology they're calling Blade Battery, which is cheaper and safer than many of the EV batteries being used today. This is a video demonstration where they show a nail going through the battery, which is a kind of gold standard for battery safety. And it doesn't make use of the cobalt, which is the costly element of a battery. Instead, it uses lithium iron phosphate. And lithium iron phosphate lasts longer and allows for faster charging. Now, their Blade battery has a range of 376 miles, along with their intelligent driving systems, their vertically integrated technology. The company itself seems to have an incredible head start on a lot of the other EV companies, and yet people aren't really talking about them. As you know, the battery is the most expensive part of the car. and they currently have agreements with Ford and Toyota to supply their EV batteries. Whilst the battery is the most expensive part of an electric vehicle, the second most expensive part is called the IGBT. In electric cars, the IGBT is a power module that's considered like the heart of the vehicle. Similar to the heart distributing energy throughout our bodies, the power module distributes and converts the DC current from the electrical vehicle battery to AC current to be used in the driving and propulsion system. The IGBT accounts for about 7 to 10% of the total car's cost. Having said that, BYD is the only Chinese company, not just car company, the only company period in China that can produce these IGBTs. They've also got 18% global market share. So they're ahead in that technology. They are ahead in battery technology, totally vertically integrated. So the last question is, will their cars be autonomous? The answer is yes. They think they'll have full autonomy within 3 years. They've partnered with technology company Baidu to get the cars fully autonomous. Let's have a look at the stock price. It's been on an incredible run in the last year. If we look at April to April that year, it went from 10.56 all the way up to, well, at its peak, $68.39. That is a 547% gain over the last 12 months. So you've got to be careful. It has pulled back, but over on the Simply Wall Street website, they say that the stock is overvalued. You can see the prices here are not in dollars because it's a Chinese company, but it's looking significantly overvalued. But it's very hard. See, these stocks that have high PE ratios, it's hard to value them because the market's trying to bet on future technology that could be huge. You know, we don't know how autonomous taxis are going to play out in the actual marketplace. And BYD is involved in so many different things. You can see this article here on Yahoo Finance talks about their solar panel production in Brazil and how that's increasing. But the financial health looks good. Their short and long-term liabilities are covered within their assets. And although they do have quite high levels of debt, they've reduced their debt from 103.4% to 79.5% over the last 5 years. There's a nice article on Seeking Alpha called BYD largely ignored versus Tesla, and I'll put a link to that in the description and a few other links that might be useful as well. Of course, it's not a recommendation to buy. Please do your own due diligence. I'll put a link in the description to help you do that as well. If you want to be notified on the latest growth stocks which have pulled back, then click subscribe, and thank you for watching. See you in the next one.